What's up, millennials? Today we're going to take a look at the valuation of a company called IonQ, which is a quantum computing company, and this company is going to be acquired by the SPAC that's currently trading under the ticker symbol DMYI. Now, before we start, if at any moment during this video you don't really know what I'm talking about, please check out my full SPAC guide that I released a few months ago. It's going to be somewhere in the description, and today we're going to be taking a look at method number 1. And if you want access to the Excel sheet I'm going to be using today, you can join our Discord for free by going to nesami.com/discord. Then you can leave your name, leave your email address, and you're going to get access to it. And of course, as always, don't trust me, verify me. I'm just documenting my journey here on YouTube. I'm certainly not a financial advisor. So don't copy my numbers as is, but use your own numbers, use your own multiples to come up with your own fair price per share. So IonQ, as I said, is a quantum computing company, and this is poised to be the first mover in this space. Because do keep in mind that quantum computing isn't very big just yet, but it could be very big in the future. Now, this can very well lead to breakthroughs in things like medicine, science, and machine learning. And we're also seeing that the quantum computing chips are becoming smaller and smaller, but also more powerful over time. And with regards to the merger date, unfortunately, we don't have a date just yet. If we then take a look at the pro forma valuation of IonQ, of course, then we can see that they started out trading at $10 per share, which is of course very common for SPACs. We can also see that they're going to have 199.3 million shares outstanding after the merger. So that is already going to lead you to an equity value or a pro forma market cap of almost $2 billion if you multiply those two numbers. We can also see they are going to have $616 million in cash on their balance sheet. And then you can also already determine the enterprise value by taking that market cap, by taking that equity value of almost $2 billion, subtracting the amount of net cash of $616 million, and then you're going to arrive at this enterprise value, $1.377 billion, which is the same numbers as over here in my investor or in my Excel sheet, of course. If we go to TradingView, however, we can see that currently this SPAC is trading at $10.37 per share. So that's a number you can plug in over here in your Excel sheet. And that means that the price has gone up a little bit. And that also means that the equity value, of course, the market cap, and also the enterprise value have gone up with that as well. We can see that currently the equity value after the merger, of course, is almost $2.1 billion, and the enterprise value is almost to $1.5 billion. But instead of the pro forma enterprise value and the pro forma market cap, what we want to know is what is the fair price per share. For that, first of all, we need to go and take a look at the fair enterprise value. And we're going to apply a very simple formula to arrive at that enterprise value. We're going to need two numbers. First of all, we're going to take a look at the revenue of a certain year in the future. And in this video, we're going to be taking a look at the revenue of 2026. And we're going to apply a range of multiples to that revenue of 2026 to arrive at an enterprise value. So we need those two numbers, revenue and multiples. Let's first take a look at the revenue. Here in the investor presentation, we can see that currently they don't really have a lot of revenue just yet. They expect to have $5 million in revenue in 2021. But it is going to scale up rather quickly. They expect to have a compound annual growth rate of 150%. That is, of course, quite a lot. And they expect to achieve $522 million in revenue in the year 2026. Of course, keep in mind this is an expected revenue. We don't know for sure if this is going to happen, but it is the number we are going to be playing with today, $522 million. And then the other number we need is the range of multiples. We're going to arrive at that range of multiples, of course, based on the multiples of AMD and NVIDIA. We can see in the investor presentation that currently in 2021, AMD is trading at an EV to sales multiple of 7.8x, and NVIDIA is trading at a multiple of 16.3x. Again, if you don't really know what I'm talking about here, please check out my full SPAC guide for a little bit more reference. So we can see that the median of these two numbers is 12x, and that is why IonQ has decided to come up with a range of multiples of 10x on the low end and 15x on the high end. So these are the multiples we are going to be using in our example as well. We can see that if you plug in those numbers, the Excel sheet is already going to take care of a few of the calculations for you. What it's going to do is it's first going to take that revenue of 2025, which was $522 million, and then it's going to apply those two multiples we just have been taking a look at. So first of all, the low multiple of 10x. If you do that calculation, you're going to arrive at an enterprise value on the low end of $5.2 billion. And if you take the high multiple of 15x, you're going to arrive at a high enterprise valuation of $7.8 billion. Then you can also determine what the midpoint enterprise valuation is, and that is in this case simply the average between the low multiple or the low enterprise value and the high enterprise value, and that is going to be $6.5 billion. And that is, of course, the enterprise value in 2026, because we've taken a look at the revenue of IonQ in 2026. We've applied multiples of AMD and NVIDIA, which are right now in 2021. So there's a discrepancy between those years. We need to now discount those back from 2026 back to 2021. So we need two numbers for that. First of all, we need a discount rate, and we also need the amount of years to discount it back towards the present. We can see those two numbers over here in the investor presentation. First of all, the discount rate is going to be 20%, which is a very common discount rate in the world of SPAC valuations. And then we also need, of course, 5 years, because we're going to discount it back from 2026 to 2021, and there are 5 years difference between those years. So if you plug those 2 years in your Excel sheet, 2026, which is the valuation year, and the discount rate of 20%, then the Excel sheet is going to take care of the rest of the valuations, or the calculations rather, for you. But I'm also going to do it manually for you so you can see what is going on exactly. So first of all, it's going to take a look at that low enterprise valuation of 2026, which was $5.22 billion in 2026. And it's going to divide that first of all by 1.2. The 2 here is standing for that discount rate of 20%. And it's going to do that to the power of 5, because of those 5 years back in time from 2026 back to 2021. And if you do that calculation, you're going to arrive at this discounted enterprise valuation of almost $2.1 billion for the low end. Okay. Then we're also going to do exactly the same thing for the high valuation. So that was $7.83 billion in 2026, divided by 1.2, because of that discount rate of 20%. To the power of 5, because of those 5 years back in time. And then you're going to arrive at this enterprise value for the high end of almost $3.2 billion. And then the Excel sheet is also going to calculate a midpoint enterprise valuation for 2021, which is again a difference, or the average between the low enterprise value and the high enterprise value. And that in this case is going to be $2.6 billion. So those are the enterprise valuations, the discounted enterprise valuations for 2021. We of course want to know what a fair price per share is going to be. Well, what we're going to do is we are first going to go back to a fair market cap. And as we said in the beginning of this video, the difference between an enterprise value on the one hand and a market cap on the other hand is the amount of net cash they're going to have on their balance sheet. And we said that was going to be $616 million on their balance sheet. So if you take those enterprise valuations, if you add back the amount of net cash they are going to have, then you're going to arrive at these fair market caps. So for the low end, 2.7 billion, for the midpoint valuation, 3.2 billion, and for the high valuation, almost $3.8 billion. Then you can say, okay, we have these market caps. We know the amount of outstanding shares after the merger, which is going to be 199.3 million shares. And then you're going to arrive at these fair prices per share. If you take those market caps, divide them by the amount of outstanding shares, then you would have a price per share on the low end, $13.62, midpoint valuation $16.25, and the high valuation $18.88. So based on these calculations, it looks like IonQ currently is actually undervalued. Of course, keep in mind, don't trust me, verify me, always check what I'm doing, always check if the calculations are actually correct. And also keep in mind, we have been taking a look at assumptions. We've taken a look at a revenue of 2026, 5 years ahead in time. We don't know for sure if this is going to happen. We've applied a certain range of multiples based on just 2 companies. So maybe that range of multiples is going to be higher, maybe it's going to be lower, we just don't know. So keep in mind that if you change one of these variables, the entire calculation is going to change and your fair price per share is going to change as well. So let me know your thoughts about this company, about IonQ, and also about quantum computing. Do you believe that this is going to be a very big industry, a very big sector? Let me know in the comments. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye!